With a company called 1031 Specialists, we're a qualified intermediary or accommodator. We facilitate 1031 exchanges for clients all across the country. My name is Mike Auerbach. I'm VP of Growth here. Just so you guys know, I've been involved in over $1 billion worth of commercial real estate transactions. First, as an advisor to owners and investors, and later I worked at a West Coast company called Bascom, where I focused on acquiring multifamily value-add properties, ultimately utilizing the 1031 exchange to compound and expand their portfolio. Today, I'm going to share with you how you can use the 1031 exchange as a tool to defer real estate taxes and build more wealth. So here's a quick rundown of what I'll cover tonight. I'm going to try and keep it to 20 minutes, just so we can get some great Q&A afterwards. First, I'm going to give you a quick overview of 1031 exchanges, and next I'm going to tell everyone who qualifies. Then I'm going to show you guys the real magic of using the 1031 exchange. And finally, I'm going to show you how, you could use the 1031 to compound your taxes, your gains tax-free, and share the best practices with you guys so you guys can have a successful exchange. But first, I want to get into and let you guys know, why we partnered with Don and Kendall and really to really educate the Protect Wealth community about 1031s. They have a great platform, as you guys know, to help educate on different strategies for wealth preservation and wealth creation. We created this simple 7-day 1031 masterclass. It's free. It's a simple 7-day course, email course that teaches, everyone from investors to novices, everything they need to know how to exchange investment properties, defer taxes, and maximize your real estate gains. If you want to sign up, feel free to go to 1031taxfreewealth.com. So let's dive into the 1031 basics. So what is really a 1031 exchange? Well, simply put, a 1031 exchange is the swap of one investment property for another like-kind property without paying tax. The way to think of it is one investment property for another investment property. And actually, 1031 exchanges have been around in the US for more than 100 years. It's important to note that a 1031 exchange transaction happens just like any other normal real estate transaction, except for a couple key differences. First, you must use a qualified intermediary like 1031 specialists, also known as an accommodator. Qualified intermediaries are independent third parties required by the IRS to facilitate 1031 exchanges. And second, and really the most important thing that you guys need to take note of, as an investor, you cannot take constructive receipt of the funds, which means the funds cannot hit your bank account when you sell, your investment property. So real quick, if we look at this graphic right here, this shows really the mechanics of a 1031 exchange transaction. First, as an investor, you are going to sign an agreement with a qualified intermediary. The qualified intermediary is going to direct your proceeds from the relinquished property or the property that you're selling to a partner bank where the funds will sit. When it's time to close on your replacement property, the qualified intermediary will direct those funds from the bank to the seller of the replacement property, thus completing the 1031 exchange transaction. So there are three primary types of 1031 exchanges: the forward, the reverse, and the improvement exchange. There's also something called the simultaneous exchange, but those are less and less common. But the vast majority of 1031 exchanges done are forward exchanges. Simply put, in a forward exchange, you're going to sell one investment property and then buy another within 6 months. If you look at the graphic right here, the clock starts on the date of when you are selling your relinquished property. You are then going to have 45 days to identify up to 3 replacement property or properties, and you must complete the transaction within 6 months. The reverse is pretty simple. It's just the opposite of that. The investor buys first and then sells a property in their portfolio within 180 days. If you think about it, you have to be really well capitalized to buy first and then sell later. So typically we see a lot of family offices and a lot of well-capitalized clients do reverse exchanges. Finally, there's something called the improvement exchange. This is when you invest equity to improve your replacement property. This is also done in conjunction with either a forward or reverse. But the most important thing, guys, is which exchange you choose really boils down to your investment objectives, capital, and timing. So, the great thing about a 1031 exchange is that there are nearly infinite 1031 exchange options. You can exchange raw land for a rental home, an apartment complex for a shopping center, or diversify from an office building into multiple rental houses. There are more than 16 different types of real estate that qualify for 1031 exchanges. And the best thing about it is that you can exchange any of these types of property inside any city or any town in the US. So as long as the property is held for business or investment purposes, you have nearly infinite exchange options. So first, you have to qualify, or rather not be disqualified from leveraging Section 1031 of the tax code. I will tell you that most real estate investors qualify. Here are three basic tests that you must pass. Guys, I see that there's some questions in the chat. I'm going to address those after the presentation, but just know that I'll get to them. So there are three basic tests that someone must qualify in order to do a 1031 exchange. First, the who you are test. You cannot be a flipper developer. You must be an investor. Second, the what you own test. Quite simply put, you must own US held real estate for business or investment purposes. And finally, the when you bought it test. Generally there's a gray area. There's not a specific amount of time that you have to hold a property. It's not, 2 years typically, though. An investment property is you'd like to hold it for over the year, but there's no, hard and fast line of when you have to hold a property for. But the who you are test is really the most ambiguous. So let's dive into that just a little bit more. So, like your personal taxes, the IRS relies upon an honor code based system, and trouble really only comes if you get audited. And if that happens, the IRS is going to look at the facts and circumstances of your case, basically to determine if you're a flipper, a developer, or an investor. The biggest gray area is known as intent. This is the reason why you've purchased the property and your reasons for selling. So generally speaking, if you think about it, an investor is going to hold a property for a long-term investment, which means 2 years or more. Many times an investor will collect rent, rental, or lease income on the property. But if you think of a flipper developer, on the other hand, they're typically going to show a report and report their property as inventory held for sale on their books and have a duration of ownership less than a year. Most times they're going to make the majority, or if not all, their money from the profit of a sale, not from rental income. If you guys have specific questions on how you may be classified, please make sure to ask during the Q&A. So I want to tell you guys something. I believe the 1031 exchange is really the eighth wonder of the world. It's literally a gift given by our government to real estate investors as a free lunch. And here's what I mean. So what's the point of doing a 1031 exchange anyway? Well, the true power of a 1031 is the ability for an investor to meet their investment objectives without losing any equity to taxation. Think about it. With more money, you can buy larger, multiple, and more productive properties. Here's a really simple example for a second. Consider a scenario where you have $500,000 in equity in an investment property that you're selling. You guys see the two columns in the middle here? The one on the left is doing a 1031, and the one on the right is doing no exchange. So when you do a 1031 exchange, it's important to note that you defer your taxes and don't pay any capital gains tax. But if you don't do a 1031 exchange, in this scenario, you'll get hit with $65,000 of capital gains tax hit. So when it comes time to reinvest, you'll have a lot less equity. You'll have $500,000 for doing a 1031 exchange and only about $435,000 not doing a 1031 exchange. Now, let's assume for a second the remaining equity represents a 20% down payment. By doing a 1031 exchange, you'll be able to afford a $2.5 million property. But if you decide not to do a 1031, you'll only be able to afford a property worth approximately $2,175,000 of property. The difference in a single transaction is $325,000. This $325,000 buys you more property, more diversification, more bonus appreciation, and more importantly, more cash flow. So as you guys can see, there's a lot of benefit in just doing one 1031. But what if you do multiple 1031s during your lifetime and just keep exchanging? This table demonstrates the impact on taxes and compounding. The same transactions, the same returns each time, 50% return on equity. The only difference between the middle column and the column on the right is deciding to do a 1031 versus not. So let's say in your investing career, you do 10 1031s. If you look at the highlighted row 10, you'll see that you have amassed, turned $100,000 into 5.766 million. But let's say you decide not to do a 1031 and pay minimum 30% taxes each time. After 10 transactions, you'll take home just north of $2 million. So, doing the math, you'll be $3.75 million richer deciding to do a 1031 versus not. But here's where it gets a little crazy. What if you did 20 transactions in your career? And there are people that do 20 transactions over a course of 40 or 50 years. As you can see in the dark gray box at the bottom, you will be $292 million richer by choosing to utilize the 1031 versus not doing a 1031. This is the power of tax-free compounding. This is the real magic of 1031s. The great thing about 1031s is that there's no limit to the amount of times that you can 1031. That's why the 1031 Grandmasters just keep exchanging. While you're alive, 1031s allow you to buy property with higher basis, benefit from more bonus depreciation, and build a bigger real estate portfolio that generates more cash flow. And when you pass away and your kids inherit your portfolio, they'll get a step up in basis and won't pay a dime on the lifetime of appreciation that you made happen. You have avoided taxes altogether. This is simply what we mean when we say swap till you drop. So let's assume you qualify, you have a property you want to exchange, and you've hired 1031 specialists as your qualified intermediary. What's next? Now is the time for planning. This is where you win. But look, it's not all roses. There are some challenges of doing 1031s. There are generally two objections we hear from 1031 naysayers. First, it feels like I have a gun to my head as far as timelines are concerned. I'm not going to have enough time to be able to identify a replacement property. And second, people who do 1031s cause you to overpay for your properties. Let's address each real quick. It is true that the clock is always ticking. The main challenge with the 1031 exchange is the limited amount of time that you have to find and close on a replacement property. Remember, the clock starts on the closing of the sale of your relinquished property or the property that you're selling. Then you've got 45 days to identify your replacement property, and you have to complete the transaction within 180 days. These deadlines are firm, regardless of whether the 45th or 180th day fall on a Saturday, Sunday, or holiday. But look, planning is a solution. We really feel that there's no excuse for not having to have enough time if you line things up properly. The more you plan, the more you mitigate in the timing risk. So before the 45-day clock even starts to tick, you can do the following. First, you can have your broker shortlist 10 properties for you. You can actually go out and identify your replacement property or properties. You can enter into an option contract to buy your replacement property. You can also put your target property under contract, assuming you don't go hard, of course, because we don't want to put your money at risk. Or you can do a reverse exchange where you buy a property first and then sell a property in your portfolio second. But look, like anything else, I realize that planning is hard. We're all distracted these days, but it takes a lot of work. But think about the alternative for a second. The alternative is paying 30% in taxes and taking a huge, huge hit. So why not do the hard work upfront and compound tax-free? So for those who think that 1031 buyers overpay, I have some advice. Tell no one. This page is literally a visual representation of the point that I want to make. Almost no one needs to know that you're exchanging. You don't need to tell anyone other than your QI and your legal team or your advisors. There's no provision in the 1031 rules that states that you have to publicly disclose that you're a 1031 buyer and that you're exchanging. So, like a lot of information out there, there's a huge misconception that you're overpaying because you're a 1031 buyer. And honestly, that's false because no one should know that you're a 1031 buyer in the first place. Our advice is tell no one. It's true that some investors who utilize 1031 exchanges overpay because they're disorganized and undisciplined, but 1031s really aren't structured in a way that inherently makes someone overpay. So here's our advice. Plan ahead and plan ahead smartly. Have a process to identify properties, whether it's with a broker or whether it's on your own. And finally, never let the tax tail wag the dog. If you're overpaying a ton just to save on taxes, you're going to be inflicting significant financial damage to your portfolio. It's probably best to opt out and just pay the tax. Look, we're here to help. We've got the best 1031 calculator in the business, everything from detailed scenario analysis to understanding what your capital gains tax exposure is based on your specific scenario. We've got some of the best material that we've created, our 1031 Bible. Basically, it tells you 95% of everything you need to know about 1031 exchanges. If you have a specific question about an exchange, I'm Mike at 1031specialist.com. But if you want a free consultation with us, just go to protectwealth.com/1031 and we'll be happy to help out. So with that, I kept it a little bit under 20 minutes. I want to open it up for Q&A and go from there. So let me just stop sharing for a second.
You go ahead. You can keep it up there, Mike, if you want to. That way people know they know where to go. If you don't mind, you can keep it up there. That's fine.
I got it. So yeah, I mean, our whole thing, just so everyone knows, is we're really here to educate. No question is, a silly question. And, again, we just want to make sure that you guys have all the information so you guys can make informed decisions based on your portfolio and your wealth.
Yeah, and if you don't mind, so I did put the link in the chat screen, everybody. So if you want to, excuse me, a free consultation with Mike and his team, and they're gurus. Like I said, we had a chance to meet Mike and his team in St. Louis. Good guys. They know what they're doing. They are experts, which is what you want. If you need a qualified intermediary, you need someone who knows what they're doing, and that is definitely 1031 specialist, Mike and his team. So I would say, if you're interested at all, if you need, have questions, if you're doing a 1031 in the near future, maybe even not do one, but you're an investor and you need to know some info, that link there in the chat, so protectwealth.com/1031. Go there. Mike, so what happens? What do you do in a consult? You're just going to answer questions basically if they do a consult?
Yeah, look, we do not collect a fee. The way our business works is we basically consult for free, and our fee, which is $1,195, gets taken out of the proceeds when it comes time for you to close on your property. It's a little de minimis, fee in as a line item in your settlement statement, but typically what we like to do is consult, make sure that you're planning ahead and make sure that you set your exchange up correctly even before it gets to closing. So yeah, we love the opportunity to help answer questions and give you the materials like our calculator and other things to make sure that you're informed. So yeah, that's basically what we do when we consult.
That's cool. Okay. Well, I appreciate that. That's really nice of you guys. I appreciate that. I know that takes time for you guys. Hopefully it's a win-win, but very much appreciate that. Can you see the questions in the Q&A screen
I
okay, Mike?
I see them and I'm going to answer them as they've come in. So the first question is
Yeah.
from Mahendra. Do I have to be the whole owner of property, or my ownership through syndicate LP in a project LLC is also eligible for a 1031? So yes, you can be, you don't have to be a 100% owner. You can be, in a partnership. You'd have to restructure the deal into something called a TIC. It's a tenant in common. Typically, as a real estate investor, you have to be on the deed and own the asset. So, if you're in an LLC, if me and Kendall are in an LLC and Kendall wants to go one way and I want to go one way, we would have to restructure the agreement to a tenant in common agreement, which means both of us would own a percentage of our interest on the deed. So if we're 50-50 partners, I would own 50% and Kendall would own 50%. And as we go our separate ways, we maintain our 1031 eligibility, but you cannot be an LP in a fund. You cannot be an investor in a private fund, in a syndication or a REIT, because you are not on, the title to the property. You have to be on the physical asset, not a, LP, interest, if that makes sense.
Wow, they're a lot more flexible than I thought. I had no idea. That's way more flexible. That's cool.
Yeah, yeah. And so, obviously before you sign a PSA, it's really important to get a tax attorney involved. We work with one of the best structuring attorneys who've been doing this for 40 years. So happy to make an introduction. Lisa's got a question. What's the definition of business purpose versus rental purpose? So it's got to be, real estate investment properties. So sometimes people own gas stations, and you can't just 1031 the business proceeds and just, not pay the tax. You can only 1031 the real estate. So that is what I mean by business or investment purposes. Franco has a question. Is this for only US citizens? What about a Canadian with real estate investments in the US? This is for only US citizens. US citizens can actually do 1031s in, different territories and in abroad too. But it's typically for the US taxpayer. That's typically who's eligible to do a 1031. We've talked to people in Canada. They've got something similar. I'm not quite sure what the name is, but they have something similar in Canada too. Tito's got a question. On your example of exchanging for 20 years, how much would you have to pay on capital gains and at what tax rate? Tito, I think just for everyone else, just for everyone speaking, everyone's got a specific tax rate. So my tax rate, Kendall's tax rate, your tax rate is different. We're not investment advisors. We're not CPAs. It's always important to check what your tax rate is based on what your exposure and actually what state you live in. So give me a second. Sorry about that. We just use essentially 30% as a baseline, but know that it could be a lot more.
Yeah, and I just read recently. You probably read this too. It's going up. There's well, our buddies there in Washington are looking like they might go up a little bit. So that's I heard 40-50% depending on the income level. So a little scary.
Yeah. And then Chuck, can you do a 1031 with, I think it means rental property outside the US? You can do a 1031 outside with rental property outside the US. Again, you have to check with, we go case by case basis, but as a US taxpayer, you can do that. Satinder had the same question. You can do that too. Can you divide the proceeds into multiple properties as down payment? Brendan asked that. Yes, you can essentially go from one property to three properties. You can go from three properties to one. Essentially, sorry about that. Essentially, you can consolidate or spread out and diversify, which is pretty important as
I
you
mean,
change your scenario and as the market changes.
I want to throw
Kathleen,
this there too, Mike, if you don't mind. Another one that we just learned of recently, which I feel dumb for not knowing, but we just learned last year. I had no idea because I've got properties, for example, I want to avoid paying 30% on, which is huge. If a lot of us in the last several years as investors, our properties have appreciated tremendously, unreal amounts. If you the last 10 years, there's a lot of equity there. And so if a lot of us like real estate investors want to get out of real estate investing, for example, kind of sort of being a landlord, which is kind of me. Don and I have done some of this. There's oil and gas mineral rights. You can actually do mineral rights, and it's kind of a passive income kind of a thing, right?
yeah, you can do oil and mineral rights. There's other things called Delaware statutory trusts. There are ways which you can invest and be a passive, go from active management to passive and still have exposure to real estate. What I always tell people is you got to do your due diligence, right, to make sure that it lines up from, a fee perspective, but also, transparency, because while you're giving up control, active management, you lose that control when you're going into some of these investments. So it's important to ask the right questions.
Right.
Um, Let me keep going. What is the average fee for a QI? Imad asked that. Typically, you know, QI fees can be anywhere from, 1,000 to $2,000. What we charge 11.95, but we make a promise to our investors. We say, we will give 100% money back guarantee if you don't have a successful exchange or you don't want to do an exchange for any reason. Just because like we don't believe in taking a fee if not, if you're not gonna do a 1031. Other people don't do that. And if you're going from one property to three properties, other qualified intermediaries will charge you an extra $300 to $400 per tax ID parcel. We just keep it 11.95. There's no processing fee. There's no ticky-tack fees that are added on. We are just, we're former real estate guys doing these things, and our intention is to make it as smooth and straightforward and transparent as possible. So that's regarding the fee. Rainey asked, do you help sell properties and find new properties? Rainey, no, we are not real estate investment brokers. We know a lot of them. We're happy to make introductions. That's really, for someone, if you want to sell your property, that's on you to find them. Again, we can help that, but typically as an independent third party, we like to stay independent of the transaction and make sure that everyone finds their properties on their own. Kathleen asked a great question. How does it work when you have debt on the relinquished property and you want to exchange? This is really important. So when you do a 1031 exchange, let's just use $500,000 as a example here. Let's say you've got $250,000 of debt, $250,000 of equity. In order to get the full tax deferral, guys, you will have to, buy a property worth at least, $500,000, replacing that debt and equity component of it. Now there are other fees that you can, that are call it taxable, taxable that don't factor in like obviously the broker sales commissions, title fees. There's our fee that is not subject to it. There's professional fees, legal, accounting, engineer, appraisal, inspection, transfer tax, recording fees, wiring fees. That is all stuff that is deductible. That's not included in what you have to do to identify your replacement property. And that's all on our calculator, guys. So I'm happy to circulate that. Rolla asks, how are third-party fees for the 1031 exchanges determined? Is it percentage-based or fee-based? Again, it's fee-based. It's just $1,195, pretty cheap compared to everything else that is in part of the transaction. Got a question.
It's a French name, anonymous. It's a French name.
Yeah, I believe it's I don't want to butcher it, but the question is, does the amount of money you put in a replacement property have to be the same or higher than the exchange property? What if the replacement property is cheaper? Typically, to get the full tax deferral, you are going to want to buy a property worth at least the same amount or more than the property that you're selling. If you decide to buy a property that's cheaper than the property that you're selling, you are going to get taxed dollar for dollar. It's called a partial 1031 exchange. Typically most investors, depending on the actual dollar amount, sometimes that's fine, but otherwise there's a big tax hit. So based on your scenario, it's good to check with us to make sure if it makes sense. But yeah, some people do that partial exchanges all the time. Bob asked, must I purchase the replacement property with a property valued at the total sales price or the net profit from the sale? We are looking at the net, the net proceeds, Bob. And again, I will send out the calculator that Kendall can show you guys so you can play around with it to, just look at different scenarios. DS asked, I'm doing a forward 1031 and I don't have a place to buy yet. What happens if I designate 3 places I will buy, but end up buying another place not on the list?
Hmm.
Typically, DS, those properties that you list on there, they have to be real contenders, as I mentioned. They can't be, properties that you just, make just to satisfy the 45 ID requirement. Most people, will, if they don't get the first property, will, end up getting their second. But if you can't identify in time, you just, pay the tax just like you would any other real estate transaction.
So you have to, just to make sure I understand, if you identify 10 properties, you have to do one of those. Is that what you're saying?
Yeah, you have to. You can identify more than three. There's other rules involved, which we can get into in a separate conversation. But there are things that typically, three is kind of the magic number. If you do identify more than three, there like I said, there are other rules that you have to go by. But I'll save that conversation just for another time.
Right.
Just because we don't have enough time. Rich said, does the replacement property have to be of equal or greater value? Typically, Rich, it does have to be of equal or greater value. Obviously, you can do a partial exchange and then you'd be taxed dollar for dollar, like I answered before. Franco asked, also is or does efficiency condo hotel ownership qualify as the proceeds for the exchange as well as buying into a condo hotel unit? Franco, that is something that we can talk about offline. Typically, again, you have to buy an investment property. I'm not sure how the condo hotel ownership is structured, if they allow, they're structured, if you guys are on the deed or how that works out. But if it's an investment property, it's probably something that we can do. We just have to look into the structuring. Brendan asked, any way to invest proceeds in a property you already own to improve the existing property? Brendan, a lot of people try and do that. The answer is no. You have to buy a new property that, you have to 1031 into something new primarily. Um, Bob asked, does your firm help identify property owners who could be on the other side of the 1031 exchange? Bob, no, again, we are not commercial real estate brokers. We work with a lot of people that are some of the best in the business. They're very specialized and, got geographic locations. Happy to make introductions if need be. Gary asked, can you do a 1031 if a rental property is in a land trust? You can. Gary, just like everything else, we need to know if it's just you, who else is a part of it, and if it's other people, we have to set it up correctly to make sure that you can maintain your 1031 eligibility. The IRS goes by a single payer tax code. So, we got to make sure that someone is tied to the property for the IRS to be able to identify. Alexis asked, 1031 tax defer only on capital gains tax, or does it include transfer tax? Alexis, I mentioned that 1031 you can do, defers the capital gain taxes. Again, other allowable expenses are, that you can deduct from the contract sales price are the sales commissions from the broker, the title fees. Some of the other allowable expenses are the 1031 specialist fee, professional fees, transfer taxes, and recording fees, wire fees, courier fees, stuff like that. Again, happy to circulate the calculator. Um,
And that
Anonymous
calculator is
attendee,
at the link, right? So in that link in the chat, guys, click on that link that, excuse me, protectwealth.com/1031. That has a calculator there, everything on that page, right?
exactly.
Okay.
Exactly. So you guys will have all the stuff there. Anonymous attendee asks, hello, we have 3 houses. We're not planning to sell them currently. Can you please tell me how to save on taxes, like strategies to write off on taxes? Anonymous, we could schedule an anonymous call, just us two, with a free consultation. Happy to go through your scenario. Obviously, I'd like to get all the facts before we go through, some strategies here. Rick asks, there's a company that sells catamaran sailboats with the management company that charters the boats out. The company says at the end of the 5-year financing plan, if you want to continue, you can do a 1031 exchange into another sailboat. Do you handle those type of
Oh,
exchanges? It's a really interesting question, Rick. People, before 2017, when there was the Tax Cuts and Jobs Act that eliminated personal property like yachts, art, other memorabilia, you could 1031 personal property. For your, scenario, I'd love to talk offline about it and just see what the actual, facts and circumstances are, just to see how that charters into like investment, property. But typically, guys, investment property for investment property.
so not like if you own a personal residence, if you live in the property and it's under your personal name, you personally live there, does not qualify. It has to be
Yeah,
an
a lot of
investment type
people, a
property.
lot of people will say, "Hey, Mike, can I do a vacation home?" Well, typically, or I rent out an Air, I do an Airbnb, and then I spend my summers in the Airbnb. Typically, you cannot 1031 a second home. The only time you can do a second home is if you stay there for less than 14 days out of the year. Otherwise, the IRS kind of codes it for personal use, which it is. So, that is something that to be aware of.
Interesting. Okay, so Airbnb type people, guys. A lot of you have these in Airbnb homes. You go and stay there a couple times a year, and you're going to 1031 exchange. Is that? I mean, it's gray area, Mike. I'm sure. I mean, if they at all find out, IRS audits you, you found out you spent some vacation time there, you're kind of out of luck.
Yeah, look, I think here's the rub on everything. Like we are not the police, we are not CPAs, we're not going to report, your whereabouts. This comes down if it happens, if you get caught, if you get audited by the IRS, like you guys will, that's tax fraud, right? So, obviously everyone's allowed to do what they want, but just know we're trying to lay out, the rules here. What you guys do is up to you guys. So that's that is something that's really important. And we want to make sure that you guys have the right information. Anonymous attendee asks, can you find rental property in Spain, Portugal, France, Panama, Mexico? Again, if you're if you're a US citizen, you can do that. We know some people that have done that. Brendan said the Biden administration is asking for 44.6%. Brendan and everyone else, just so everyone else knows, the Biden administration has proposed, capping 1031s to $500,000, I believe. I think just so there's a lot of great lobbyists out here that are fighting that. We don't foresee that there'd be any change in, 1031 exchanges. Going forward, just because most recently they had the 2017 Tax Cuts and Jobs Act. And obviously real estate, as you guys know, is a great tool for people to you know, compound their portfolio, generate wealth, and velocity wise, we need that in the real estate market. Samantha asked, how would you 1031 work if you were going from individually owned property to buying a new one is an LLC? Samantha, same thing as before. This is something where you'd have to set up, instead of an LLC, you'd set up a TIC. It's called a tenant in common. It allows multiple investors to purchase a new property and distribute their ownership as a percentage on the deed. Again, if you're interested, we can, tell you how to set that up, and we can refer you to one of the best tax attorneys in the country.
So that comes down to planning. It's got to be done beforehand, well in
It's got to
advance.
be,
Again,
yeah, it's got to be done before the PSA is signed of the property that you're selling, most likely, especially in a state like California. They've got some different rules. Nicoletta asked, we have a fully paid off property we want to sell, exchange if possible. We also plan to transfer to a newly formed LLC for asset protection. Would it be better to transfer and then exchange, or directly exchange and sell this property? Again, Nicoletta, you have to, number one, like you cannot do a 1031 exchange if you sell the property. You have to do a 1031 before you sell the property, because you cannot take constructive receipt of the funds. I am happy to talk to you offline about planning based on your scenario and in your situation. Would love to consult with you later. Chuck T, can you replace with a REIT? Chuck, as I mentioned, you cannot 1031 into a private fund or a REIT. That is something that is not allowable by the IRS. Anonymous attendee, what is the time frame if you want to sell two properties, then buy one property? Obviously, it'd be great to line up both properties on the same day that you want to sell and then buy one property. Again, the timeline is 45 days, and then you can close, within 180 days from the time that you sell those two properties. Um, Bogdan, can you sell a property owned by an LLC, then use the proceeds to 1031 to purchase a property under a different LLC? People do that all the time. Obviously, they set up different LLCs. Just have to make sure that, the same members of the LLC do the 1031. Rolla, can you do a 1031 exchange from real estate to stocks? No, Rolla, it's just real estate to real estate. Virginia asked, do you have to exchange the whole amount? No, you can do a partial 1031 exchange, which we talked about before. But again, depending on your specific scenario, there's different pros and cons. And if you do take out money, you will be taxed dollar for dollar. And that is typically a pretty high amount. Joshua asked, can you go from residential to commercial or vice versa? Joshua, there are more than 16 different types of real estate you can go from. You can go from 10 single family homes into an industrial building. You can go from office right now to multiple rental houses. You can swap, as long as it's investment property to investment property. David asks, which financial institutions do you keep your funds during the exchange? Great question, David. Just so everyone knows, we, use, banks that we set up a segregated separate trust account in your name or your entity's name. The funds sit there. They're not commingled with other funds. They're in an individual account. They're not invested. We take proper secure protocols. We institute something called a qualified escrow agreement. For the funds to even moved, we have to sign off, you have to sign off, and the bank has to sign off before they're even, moved. But David, we can talk about that offline specifically, but that's a great question. Gene, are the limits on a reverse exchange the same as a forward? Yes, Gene. From the moment you buy your property, then you'll have 45 days to identify a property in your portfolio to sell, and then you must sell it within 180 days. Narson, if I understand it correctly, taxes deferred in a 1031 exchange. If we swap till I drop, at what point does the capital gains tax get paid? If your heirs inherit the property, they'll never have to pay a dime of the appreciation that you made happen. If they don't, you'll have to pay all of the capital gains tax and any depreciation that that you haven't paid. So the best case scenario is someone in your family inherits it and they get a step up in basis and don't have to pay a dime of tax.
So that's big.
Rainy,
That's a capital gains avoidance and depreciation recapture avoidance, right? Both of those.
exactly.
Huge.
Yeah,
Huge.
that is huge. Rainy, what if there is no debt? Then does it go by purchase price or value of home now? Rainy, it always goes by the contract sales price. And again, once you download the calculator, you'll see, what the net proceeds, look like for you to identify a replacement property. Chuck T, is it better to pay off debt or on relinquished property before you do a 1031, or does it even matter? Chuck, obviously, I think for a lot of people, you have to, your scenario is based on your specific situation. Obviously debt can be used as a tool in real estate, but that's really personal preference. Dale, can you do an exchange on a new build? Dale, typically you can do a 1031 into an improvement exchange, right? So, that is when you use equity from the property that you're selling into a property that needs improvement. There are some investment properties that have new builds in there, but again, we have to see exactly what the facts and circumstances are. Franco, if the real estate is owned under a USA LLC, can the 1031 apply? Of course. Yeah, we do 1031s for people who've got LLCs in the US all day long. Shirley, is the original investment the buy-in price somehow in the formula? Example, bought property for 200 and sell is 800 and I want a 1031. Yes, that does the entire capital gain deferred if I buy the new property greater. Yes, surely our calculator is going to, be such an easy tool for you and you can put that in. Anonymous, what is time frame if I want to sell two properties, say 1 month apart, then want to buy a replacement property? You have to identify, both those properties within, 45 days of the property that you want to buy. We can talk about that offline. Briant, where is your firm headquartered? Briant, we got offices in Denver, also California. We help clients from Hawaii to New York, all 50 states. The most important thing for us is to be responsive, and obviously we work weekends too. So happy to get in a phone call. And how does a reverse mortgage affect a 1031? We could talk about that offline. That's a little bit that's a little bit more time than allows me for right now. Um, Bob, if I can't complete a 1031, how long do you hold my funds from the sale of the relinquished property? Great question, Bob. So if you decide, if you're in day, 43 and you decide not to do it anymore, the funds get returned to you on day 46. If you're on day 135 and you're like, hey, Mike, I don't want to do this anymore, your funds get returned 181. These are the IRS rules. These are not something that we choose. We go by the rules. Anonymous, does your company facilitate selling property in charitable remainder trust? Typically, anyone who's a nonprofit or a charity typically gets a tax benefit. We can look at, doesn't really make the most sense to do a 1031, but we can look at your, situation case by case. Aisha, if you are selling one property, want to purchase two properties, do you still identify three properties, or can I identify more? You can identify more. Again, it's a little bit unique, and since it's been asked a little bit, I will go into what that means when you identify more properties. Typically, if you're going to identify more properties, there are some rules. The first rule is, if you identify more properties, you got to, there's a couple of things. There's called the 200% rule and a 95% rule. So, essentially, the 200% rule is if you're going to identify, more than, call it more than three properties, you must, you know, I'm trying to find, the right verbiage here, but that's something that we can get into offline. I just want to spend some time on some of these other questions. Um, Joshua, can you 1031 into a new construction loan? You cannot go from loan to loan. You can do, that's part of the improvement exchange, but there's some things that we have to, go through. That's a great question for us offline. Rolla, can you touch on how to avoid capital gains for real estate purposes and passing on real estate investments to children and trust beneficiaries? Um, yes. I mean, again, we aren't attorneys, we aren't CPAs. That's a great question for your CPA, but that is something that, we are part of the process that help plan. Alexis, replacement property starts a new depreciation. Yes, one of the best things about 1031s is that you can depreciate, a property, all the way. And then once you identify a new replacement property, you can get that, you can start the depreciation schedule. Um,
That's gold. That's gold right there.
that
That's
that
awesome.
that, that is gold. That is gold. Let
Mike, you're
me
awesome. Lots of questions coming in. We're getting close, guys. Are you okay to go a few more?
Yeah. So I just want to touch on the 200% rule. Someone asked, like, what if you identify more than three properties? If you identify more than three properties, the combined value cannot exceed 200% or two times more than what the value of those properties that you're selling is sold. And if the list has more than three properties and the value does exceed 200%, two times of what was sold, then 95% of the list must be purchased. So I just wanted to touch on that real quick because I know a couple people asked that. Um, Aisha, can you use the 1031 proceeds from the sale of the property to do renovations and property purchased? You can, that is called an improvement exchange. That is something that you have to be really, really organized to do. You have to get the work done in 6 months, and you have to be really detailed when it comes to the scope of work. And you draw down, you basically use the equity and you draw it down and pay the contractors. But that is something that is, it's doable, but it takes a lot of planning. Lisa, do I need to disclose on the purchase contract that I'm doing a 1031 exchange? You do not. Brokers will tell you that, but you do not need to do that. Amelia, if I decide to buy two properties that together is the total of the proceeds, am I still eligible to do a 1031? Yes, you are. You can go from one to two or one to three. Bob, I hear I can rent my personal residence for 1 to 2 years after, which is which it is considered investment property. Then I can 1031 it. Yes, you must, you must, there's basically a rule where it says that you have to establish a fact pattern, essentially, that you're collecting rent from a tenant. But yes, you can do a 1031. Judith, does the replacement property have to take title in the same way as the old one? For example, I am sole owner and I like to buy the replacement as a partnership. Again, you could set up a partnership as a tenant in common to maintain your 1031 eligibility if you're bringing out an additional partner. But if you're going from single member LLC, you can do it, into another single member LLC. Anonymous, can you replace three properties, each price less, but add up to the total value of the exchange so it's not a partial exchange? Yes. Again, these are case by case basis. Anonymous, if I exchange relinquished property to a DST, do you introduce us to DST companies? We know a ton of DST companies. Again, it's up to you to do the due diligence. We're happy to make some introductions if you need them.
That's
Christy, I
Delaware
joined.
statutory trust, right? Like a Wyoming statutory trust, Delaware statutory trust, right?
Yeah, Christy, I joined late. Are you insured and bonded? Yes, Christy, we are insured. We take all the necessary protocols to make sure that your funds are safe and secure. Happy to go through that with you offline if you're interested. Amelia, I have a rental property that is under my name. Am I still eligible for a 1031? Yes, as long as it's investment property. Are you allowed to do a 1031 exchange with a related party? That's a great question. There's a 2-year hold period for someone that buys the property to do it. And you guys both have to do a 1031 exchange. So there's a little nuance there. Anonymous. Actually, Rolla, how do I calculate capital gain at the sale time and retirement? For example, is it based on the first property based price? That is something to talk to your CPA about. Anonymous, should I lease relinquish property to buyer to make sure we meet deadline? Not quite sure what you mean about that, but you should always, if you can, have a tenant or have had a tenant, but as long as it's not your homestead and you have replacement property, that's good. Are you working with properties in certain states or all states? We do 1031 exchanges for investors all throughout the country. Guys, sorry if I seemed a little frazzled and didn't get to all your questions. There was, more than,
Great.
64, and I just wanted to make sure I spent some time. A lot of these questions, guys, are very specific based on your scenario. We're happy to answer them. And I think you'll enjoy a lot of our materials that we have that can help answer these for you. But again, we just want to make sure you have those answers so you can make the right decision. Happy to get in a call with all you guys.
I love it. That's awesome, Mike. You jumped through those questions so fast. I love it. That's nice. It's rare we get to all the questions, so I appreciate that very much. It's really nice. Great questions, guys. Obviously, this is something that you're all interested in and want to know how to do. I thought fantastic questions and great responses, Mike. It's nice to have an expert on. Thank you so much. I did put the link in the chat again if you joined late. protectwealth.com/1031. Fantastic, guys. This is a great resource. Mike, I've looked at your resources. You've got a lot of information on that website. You've got some great calculators. So if you're a real estate investor, get on it, plan ahead, and make it happen. And make sure you reach out to Mike and his team at 1031 Specialist. Mike, thank you so much. Anything else before we close?
Hey, no, I just want to, thank you guys again for having me. Hopefully you guys found value and, what you learned here. And again, like no question is silly. Happy to chat offline and make sure that you guys can plan ahead for a successful 1031.
Tax planning at its finest. Thank you, Mike. Thank your team so much. Really appreciate that link. If you need anything else, make sure and use that link. Mike, thanks so much, and go Nuggets.
Yeah, let's go. Thanks, guys. Appreciate it.
Everybody, thanks for joining us tonight. Everybody have a great night, and we'll see you again soon.
Bye.
Good night, everybody.